Hi guys, this is Mark Shawson, the Pattern Trader. Several weeks ago, I started alerting our thousands of members around the world that there was a brewing situation in XAU USD. That, of course, is the ticker symbol for spot gold. At the time, I was saying that based on certain technical price patterns, the breaching of a 10-year symmetrical triangle, that there was a huge move in the offing in XAU USD. In today's market, XAU USD shot up $18 to a price that we haven't seen since 2012. It's now trading around $1,420. Now, given this breakout of this long-term symmetrical triangle, it looks like XAU USD is going to go up for an extended period of time. However, given the fact that we've shot up almost $100 in just a few weeks, I'm advising and counseling our members to take profits on their open positions at a price of $1,420, which will give us a total yield of about 690 pips on a trade that we initiated on June 12th, just about 10 days ago. So it seems that everybody, has not profited from the advice I sent out. I'm going to read you a quick comment from a fellow named Graham. Graham sent me a message a couple days ago, and he says, "Hi, Mark. I looked at your trade wins, and good luck to you. I have a small account, and I lost 900 pounds. Wow, that's a lot to lose in a small account, 900 pounds last night. It's taken me about 2 months to build up and one bad move on gold. Would you believe it?" No, I really can't, because gold has been on the rise. I apprised you of that coming move, so I don't know what you were doing, Graham, but you got knocked out, and you said it knocked the stuffing out of me. Looking at your trades, you've amounted more in swap fees than I guess I made in profits, but it still hurts like SH1T. I've learned so much this past year, and I'm only a couple of $100 down at this time, but the road, I guess, continues. And then there was a comment, right under it that basically stole my thunder, and this is how I would have responded to Graham, from a fellow named T1. Mark would advise to risk only 1.5% to 1% on a trade, and that seems to be your downfall. So Graham lost over 900 pounds, which is about 1,400 US dollars in what he said was a small account. So again, this seems to be a mistake that so many retail traders make. They want to make so much so quickly, and they don't understand their position sizing. So as the fellow said in the comment below, I typically advise our members to take between 0.5% and 1% risk on a trade. So that means if you've got a $2,000 account, that you should only be risking $20 on a trade. And that way you can't get wiped out on any individual trade. If you really like something, I would go up to 2% of your account. But a lot of people are picking arbitrary lot sizes. They don't really understand their position size. And then they're taking risks that work out to be, 5, 10%. And in the case of Graham here, it sounds like he took a huge hit on a small account on just one trade, which of course is the cardinal sin of most small traders. So in this game, the tortoise wins the race. And if you bet 0.5% and you make 1.5% on a trade, you will very quickly grow your account and you won't wipe yourself out. So again, in the last couple of weeks, I've made 700 pips on one trade, just sitting in this monster gold move that looks like it still has a long way to go. But just based on the speed, the pace that we've gone from $1,350 all the way to $1,420. I'm cautioning our members and saying, maybe you should take partial profits or all your profits, step aside, wait for a little consolidation and another point to enter the gold trade. So gold, XAU, USD, and the short side of dollar yen, as you guys know, have been on my radar screens. Look like they will be the pairs that will continue to be on my radar screens. And I hope you guys are prospering from these trades. So with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.